Welcome to AddLife. My name is Kristina Vilgard and I am the CEO of AddLife.
My name is Martin Almgren and I am CFO of AddLife.
Today we are going to present the interim report for first quarter of 2020. The highlight in this first quarter is that we have seen a high demand and a strong profit growth. It is an exceptional quarter, as we all know. What we see is that in the March we got very positive impacted of product sales related to the COVID-19 pandemic. Our subsidiaries and the group report strong sales and a strong EBITDA growth. Actually, this is the first quarter when we have sales more than 1 billion Swedish krona. So sales increased with 25%. Our EBITDA increased with 51%, ending up 106 million Swedish krona, and we strengthened the EBITDA margin to 10%. In the quarter, we completed the acquisition of the Italian company Euroclone. This is, for many of us, a very strange period in time. The COVID-19 pandemic came as a major and sudden change. I would say it's an extreme situation, both for all of us living here in all societies. The outbreak has changed the way we live, the way we work, and how we can meet people and communicate also with our customers. Many societies have been locked down. For us at AddLife, we have had really first-hand experience of the effect of this crisis. In the month of March, the sales and the demand increased a lot. We sell a lot of crucial medical supplies to the healthcare and also to the diagnostics laboratories in the hospitals. We have received a huge order of 100 million Swedish krona in our field of medtech relating to personal protective equipment. That order will be delivered during the coming 2 quarters. What had happened also in this strange quarter is that the sourcing and the freight of product has been very much implicated. It is challenging to source products, and I think the whole world has seen our dependency of Asia and China. We have seen that the need for products and the same sort of products has increased from all nations throughout the world at the same time. It's a lot of new players in the field, both suppliers and also companies purchasing medical supplies. We have been working very hard to make sure that the products that we sell and that we source meets the requirements for being medical supplies. In this quarter, most of our employees started to work from home end of February, beginning of March. And that means that we meet our customer on digital platforms. We have very limited access to our customers, and our service technicians have difficulties to do their service maintenance of instruments. Of course, our people who works with logistics and warehouse are still in the offices to make sure that we can deliver all the products that's needed as soon as possible. But we also see different scenarios in our companies. Many of our companies have, as I said before, have had high demand and they have extreme hard work situation. But we also have some other companies where the telephone now is a little bit more quiet because the customers are not in their offices or in the laboratories. So it's different scenarios in different companies. And our MDs in our subsidiaries have done remarkable work and taken a lot of responsibility to act in this difficult situation. I'm very humble and I'm incredibly proud of the fantastic work, the commitment and the loyalty and the engagement from all our colleagues and what they have achieved in this difficult situation. Coming back to the net sales, as I said, we have seen strong growth in both business areas, totally 25% increase in the quarter. Organic growth was 12%, strongest in the medtech field and a bit weaker in the labtech field. Positive impact of the COVID-19 and, as I said, a challenging sourcing situation. Our public customers, which is our main customer in this area, are now doing direct procurements of the products related to the COVID-19. And that is, of course, that the sourcing and the need is right now and cannot wait for a longer period. So the market itself has a very short-term focus. And of course, that is needed in a crisis like this. But that also means that we have difficulties to meet customer and sell in long-term solutions. If we look at the year-over-year, the net sales have been growing 35%, of which the organic is 7%. EBITDA has grown even further. We increased EBITDA with 51% and the margin increased up to 10%. This margin improvement is of course due to the high sales volume that we have seen in our subsidiaries, and also that the group has been very cost efficient in this quarter. If we look at year over year, EBITDA have been growing 33% and the margin rolling 12 months has increased up to 9.2%. Starting to dig in our business areas, we start with the LabTech business area. And this year is the same as last year. We include 60% of the Biomedica group in LabTech. Totally in LabTech, we've had an organic growth of 5%, but it's very different between the diagnostics companies and the research companies. We actually have double-digit growth organically in the diagnostics. As I said, big impact for the COVID-19, and we completed the acquisition of Euroclone in January. So looking at the figures, LabTech ended up with a sales of 611 million, which was a growth of 21%. EBITDA ended up to 72 million, it's a 39% growth, and the margin ended on 11.8%. Some more details though in LabTech. As I said, diagnostics had a very strong organic growth, and that we see in all Nordic countries, Poland and Austria. In the Nordics, Sweden was a little bit weaker though than the other Nordic countries. We see very high demand for diagnostics in ICUs and in emergency departments due to the COVID-19 pandemic. And the demand is not only for COVID-19 tests, it's need for all different tests that are used in the hospitals. But we sell COVID-19 tests from a few different suppliers throughout the European market. Our major supplier in diagnostics, Radiometer, which we have been working with for more than 70 years, sell blood gas analysis. And that diagnostics tool is used a lot in ICUs and emergency departments to check lung capacity. And of course, the growth from that segment is particularly strong in this quarter. And if we summarize diagnostics, we see that in the product mix, the proportion of reagents is higher than normal. We sell instruments as normal, but we have more reagent sale in this quarter. Going to the research companies, we see on a total that the demands are weaker. It was stable and even growing, but then the COVID-19 breakout came. The pharma companies are still robust. and the pharma companies that are our customers are mainly in Denmark. But we see that several academic customers have closed down because different countries has decided to close down universities during these times. Our new acquired Euroclone has developed according to the expectations. But as we see, the Italian market is, as well as other markets, very challenging, and it's difficult to assess how it will look going forward. Specifically, we see that the sales has increased a lot in the area of food testing, and we've seen in Sweden very much that food stores have increased sales in these times, but still our food diagnostics companies has really increased the work during these times. If we look at our own advanced instruments that is sold throughout the world to academic customers, we see that the Chinese lockdown starting in February has really lowered the sales of that company. They have 30% of the sales normally to China. But as you then understand, it has been very weak during this quarter. Coming back to Biolin Scientific, the company I just talked about, they got a fantastic prize this quarter. They received the Red Dot Winner 2020 award. They were coming out as best of the best. This is an international design competition for product design. And of course, we're very proud when we see that our own developed products get these fantastic rewards in the market. Moving to MedTech then. MedTech in this quarter, as in earlier quarter, includes 40% of Biomedica. The organic growth was 22%. We also in this area see a big impact from COVID-19 for many segments in the market. As I said before, we received a huge order for 100 million Swedish krona in our subsidiary of Mediplast. That order will be delivered during the coming quarter. And the order is for personal protective equipment to different hospitals in the main regions of Sweden and to Norway, Sykehusinnkjøp in Norway, which is the purchase agency in Norway to all hospitals. Net sales in this quarter ended up 442 million, which was an increase of 30%. EBITDA ended up on 37 million, which is an increase of 64%, and the margin increased to 8.2%. Some more details in the MedTech area. As I said, strong growth in health services. We see a strong demand for medical supplies and especially personal protective equipment. Normally, personal protective equipment is some 10 to 15% of the sales in this area of our business. But of course, that has increased in proportion in the quarter. For us, it has been very important that all these products that we now sell really meets the regulatory requirement and really helps the personnel who works in the hospitals so that they can make sure that they can protect themselves the most as possible. In the quarter, we also finalized the integration of the Wellspect portfolio. The Wellspect portfolio is now CE marked in the name of us, and we can sell it throughout the world. And we hope that we, in the coming quarter, will see an improved margin out of this business. In other areas in the health services, we see somewhat weaker demand when we talk about products for non-emergency procedures. Most hospitals and countries have focused everything on the pandemic and pushed the non-acute or non-emergency procedures in the future. But what we hear is that during Q2, most countries will open up again. Going into home care, The high demand continues in home care, and that is of course according to all the trends that we have discussed earlier. We see high demand and sales growth for assistive equipment, and it's very promising that we in Sweden have had a large installation of products that actually originates from our company in Finland, and that now shows the sales synergies that we can do between these companies in the group. In Norway, we have continued to receive new contracts for the welfare technology, and we see that it's interesting also that the customer has contacted us because they want earlier deliveries of these welfare technology in the coming quarters because they see the increased demand and need in the market. We still have some delays in projects for building of assisted living facilities in Finland, which means that that market is somewhat weaker in this quarter. So to summarize the sales and the business, I would say that the geographic sales in the group has changed a lot from last year to this year. And you see that in this picture. Sales outside of the Nordics is more than 30%. And the market in these areas is of course of increased importance.
During the quarter, we have repurchased 125,000 own shares, and the reason for this repurchase is to cover the ongoing incentive programs that we have in AddLife, and also to make it possible to pay with own shares in future acquisitions. We have also signed new credit agreements with Handelsbanken and Danske Bank, and we have increased the credit limits with another 200 million Swedish krona. The board has proposed a split of the AddLife share from 4 to 1, and this is the reason behind this is to increase the liquidity of the shares. The board has also proposed to withdraw the payment of the dividend during to the AGM, and the board also see a possibility to have an extra AGM later in 2020 to decide to have a new decision. If we look at the acquisitions, as Christina said, we have Euroclone, which is the only acquisition that we have done in the first quarter. It's an Italian company within the segments cell and molecular biology. It's a segment where we have already been present in the Nordics through our biomedica companies. So it's not a new segment for us.
It is the Nordica companies. Sorry. A lot of names of our subsidiaries.
Sorry, of
No
course,
problem.
the Bionordica companies in the Nordics. Euroclone has a net sales of 280 million Swedish krona and 58 employees. If we look at the income statement, as Christina said before, we have a good growth in net sales, and the net sales grew with 25%. We keep and we have also increased the gross margin slightly in the quarter, and it ended up on 35%. The overhead cost has been efficient, and this has led to that we have an increase of the EBITDA to 106 million Swedish krona and an increase in the EBITDA margin also from 8.3 to 10%. And what is positive is that we see that the profit for the period also increased a lot, and it's up 53% compared to last year. If we look at the balance sheet, as I said, we have included Euroclone, which has increased the goodwill and intangible assets and also the interest-bearing liabilities. We have repurchased own shares, which has had an effect on the equity with 31 million Swedish krona. In this balance sheet, we have IFRS 16 effects of 235 million Swedish krona. And at the end of March, we have 565 million Swedish krona in available cash. So in total, we continue to have a strong balance sheet, and a net debt to equity ratio of 0.7 and an equity ratio of 42%. If we look at the cash flow, we have a lower cash flow this quarter compared to the same period last year. The operative cash flow amounted to 80 million Swedish krona, and the reason behind the lower operative cash flow is mainly due to increased working capital. And here we see that the higher sales has had a negative effect on the working capital with increased accounts receivable. We also see that the amounts of prepayments to suppliers has increased in the end of the quarter, and this is due to suppliers that we have in Asia that we have to make prepayments to get products. If we finally look at some of our key financial ratios, we see that we have a good profit growth on EBITDA level. The profit growth, which is our financial goal, is on rolling 12 month 33%, which is well above our financial goals of 15% profit growth. Return on working capital ends up at 54%, which is also well above our financial goal of 45% profit through working capital.
So that was a short and quick summary of our first quarter report, and to summarize it, I would like to say big thanks to all our colleagues who have done a fantastic job in these tough times, and we all work hard and try to help healthcare hospitals with the products that is needed to take care of all patients that are really ill in these tough times. So Q&A opens up, and please contact us if you have questions on the report. You see